Hello guys. Today the market is down. As you can see, all the major indexes are down, and a lot of trouble for investors, mostly investors and swing traders if you are going long. Now they say that the reason for that is that the federal has increased the interest rate. And understand this situation. You say to yourself, what is the relation with this interest rate of banks to the stock market? So what's the deal? The deal is that mutual fund managers, as I always speak about them, if they see that the market, the interest rate is rising, it means they could buy more bonds, either whatever kind of bonds. So because the interest rate become higher and higher and higher, so the people, they say to themselves, why not to risk our money into the stock market if we can find interest rate and we make money? And this is what happened. And maybe it will happen in the future. So today is the biggest day down for the Dow and for the other major indexes. I will show you right now. So for example, I will show you the three major indexes. So these are the ETFs, because for me, I always show you the ETFs, not the index itself. So the Dow Jones, you see $8.17. It means it goes 3.09%, and you see this red candlestick, which is so big. Now, what did I tell you before? I told you before that the market is so strong and it is good. See, from here to here, and I have made a video right here. But today, see what happened. This is the resistance line. I told you if we go down the resistance line, it means that we are still in the correction. Now we go back to correction, and I don't know where it goes. Okay, so let's see the S&P 500. It was so strong, as you can see. It was so strong, and then on last week it began going down, and today you see it crosses down. It means we have gone down. Here is the resistance line. We go down the resistance line. It means we are in the correction. Now we take the Russell 2000. As you can see, we have the Russell 2000 was doing so good, and it was doing so good. But this month of September and October, it's going down, and today it hit and crosses the resistance line going down. Okay, so it is so bad. Now, what you should do in this situation? All my guys that are doing swing trading, you put stop loss, you exit the trade. This is the best thing you can do. You should not wait without stop loss and to wait. This is the biggest mistake you do in your trading. You are trading, you should put stop loss. When things go bad, you exit. Now, what are the solutions? What you can do in the future? In the future, either there are two ways. Either you sell short the stocks, ETFs, maybe these following days, tomorrow, Thursday and Friday, maybe it continues to go down. If you sell short a stock or something and it goes down, you can make a lot of money. Even if you don't know how to short sell, you should not buy a lot. Just buy just to practice, because this is an opportunity to practice if the market continues to go down. But I'm telling you something. Never hold a stock when you sell short. Never. Now, why I tell you this? What if tomorrow there is another big green candlestick, opposite? It means there is a reverse. You will lose a lot of money. So be careful. When you want to do selling short, you do it in the day. In the day, it means at 9:30, you go in the morning, you put some stocks, the market opens, then you begin to see which is going down. You sell short the stock. You don't have to buy a lot of shares. If you are just practice, even if you buy 5 shares or 2 shares or 10 shares, just to practice. Okay? Just to practice how to sell short. Now, for those who have never sold short, they don't know what is it, they don't know how, please check training level 11. How to sell short a stock. Now, this is one thing. Second thing, you can short the whole indexes or sectors by using certain ETFs. This you will find it in training level 18. You do a normal trade. When the index is going down, the opposite will happen. It will go up, so you will be making money. If you are interested in those ETFs, please go to training level 18 and take the training and study. Now, if you don't want to do anything, if you want to do another thing that I propose is using puts and calls options. Okay? Because you know how much you lose. For example, you want to try, let's say you buy one put option, let's say for 1 week or 2 weeks or whatever. It's just a little time, and you don't spend too much money. It's $50 or $70 or $100. You can use puts and see. And you can make money also. So these are the 3 major things you can do. And there is a training also for how to buy call and put options, training level 14. Now I put the links into this video. If you are interested, just to try, okay? Because in these days of trouble, if the market is going down, it's very easy to make money, because most of the people will follow the mood of the market. It means they begin to short in the morning. If it continues, you can make money. But the only thing you can do when you sell short a stock, do not hold the stock for tonight. This has a big risk, because if there is a reverse or there is something or something else, you could lose a lot of money. So try just to see the market. You do a trade, even you do a trade of 10 minutes or half an hour, 1 hour. It's just a try, because this is opportunity to sell short. Okay? And you should not just go in the morning at 9:30. The market opens and just you go and you short the market. No, you should see first where the stock is going. Maybe it's going up and we have a green candlestick tomorrow. Okay, there is a reverse. So be careful. Okay, so don't do something without looking at the price. So this day trading is always about the price direction. If it go up, you make money. If it go down, you can make money. Just the direction of the day. Okay? So the links for this training are below here in the description. If you want just to get training to see how to sell short, how to find these opportunities and how to make it, because right now, if the market is still in correction right now, if it continues to go down, it might stay a few days. We have a crash. It means the stock market continue to go down and hit the red line, which is the support line. I will show you again just to have an idea that you understand. So here, as you can see, this is, or as you can see, Russell 2000 ETF is going down. It hit the resistance lines, going down. So what does it mean? It means here, between this red line and between this blue line, all this is called the correction, because the correction is that one. Okay, let me see here. Yes, it's this correction that we have seen before. Now, if it continues going down and then it crosses, if it crosses the red line, understand that we will be in a bear market. Before I told you, the market is trending into a range. We are still in correction. We go out of the correction for 1 month or 2 or 3, but then we go down and we are going to the correction again. It might that this will continue until we go down, and if it crosses this red line and goes down, it will be a bear market and the beginning of the big crash. But if you sell short, if you short the whole market, if you use put options, you will be making money also. Okay, so that's it for today. Tomorrow I will make another video just to make sure you understand the things, and understand that if you are an investor, you begin to see big losses. If there is a bear market, all what you made last year, 2017, you will lose it in few months in this year. Okay, so understand that. Don't play the fool and leave everything down until you lose all your profits. Okay, so thank you very much, and see you next video.